Today's Thursday, May 29th. And it was another crazy day on Wall Street. Yes, it was. I'm an associate member of T3 Trading Group, which is a SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I'm like so tired that I couldn't even read that off the as I was reading it. And I say it every day. It shouldn't be that hard. Position disclosure is just about the same. I am out of these NVIDIA calls. I got out of most of those NVIDIA options. Not quite all, but most of those NVIDIA options that I put on to give me some safety on. Oh, there we go. Path. Boom. Okay, out of path. Yes, take that one off the disclosure. Let's take that one off the disclosure. Path trading up on earnings to my target. I am out. Bada bing, bada boom. All right. All right, I'll take it. I'll take it. I didn't have a big position, but I'll take it. Someone remind me what I'm talking about. All right. I haven't been drinking, I swear. I'm just at that point that, you know, when you get, they say that, what are those studies that, like, if you're on not a lot of sleep for, like, a few days in a row, it's, like, the equivalent of driving after having, like, 5 drinks or something like that? I feel like I'm at that point. Trading is a low-stress job. And you get to work from home. Yes, you do. Yes, you do. If anybody has that path report and can provide it, I appreciate it. I see Josh giving me a couple little data points on it, which I do appreciate as well. All right. We still closed green today. We're down a little bit after hours. We closed pretty much at exactly 590. 589 spot 99 close. Wonder if they're starting to pin that already. Oh, thank you. Path beats by a penny and beats on revenue. Exactly. I wonder if they're starting to already set up a 590 pin for OPEX, weekly OPEX, and a month tomorrow, whatever. SPYs closed green on the day. The Qs are down after the close as well. They also closed green, not by a huge amount. The Russell closed up 0.3 percentage points. So the Russell actually looks like it closed up more than the Qs did. The back and forth between Qs and IWM relative strength today, pretty interesting. Really interesting to see the IWM now back up a little bit more than the Qs just a couple minutes after the close here. I'll circle back to that in a second. TLT up 0.9%. Also an interesting mover today. That being higher along with gold kind of inclines me to think that it was a little bit more of a fear trade in there. Hard to be sure exactly. Bitcoin got hit again today. It could be some foreshadowing. Sami Abu Saad said it perfectly yesterday. Something I've noticed also when we were on our little Wednesday podcast thing that we do, our little Wednesday show. And he said, you know, we've actually seen Bitcoin lead the market as being like a forward indicator of what the market ends up doing. It certainly led us higher to the point where it kind of changed my entire tune on crypto. I wouldn't say I'm a crypto bull, but I'm not the bear that I once was. So it's interesting to see Bitcoin trading down again today, kind of second day in a row on that. Maybe that means something for the market. Maybe it doesn't. What did oil end up doing? Yeah, oil ended up down today also. All right, let's talk about this market price action. Let's talk about the day today a little bit because, I mean, the degree of insanity here is very high. You almost can't really see it in the intraday chart of the SPYs. You almost can't really see it if you look at the daily candle of the SPYs. You have to bring in the after hours price action. And it's interesting, if you're specifically a 9:30 to 4 trader, this actually wasn't too insane. But if you were trading the after hours at all or watching the futures, I definitely lost some sleep last night because of how the market was trading and the positions that I have on, and wanted to be up early to take advantage of the pre-market price action. So kind of like I said in the morning meeting, I traded NVIDIA all evening yesterday. At about 7 o'clock, I was about to turn the computer off. NVIDIA was really slowing down, as these earnings names typically do, and I was ready to shut it down. It was a long day and get some dinner. And just as I was getting ready to turn the computer off, spies popped a little bit. Fine, normal, not the end of the world. But then by the time I'm like really shutting down the computer here at 7:05, spies are getting to 594. I'm like, all right, what is going on here? I couldn't find a headline right away. It took me a minute, and then I found the headline. Basically, everyone knows now exactly what happened. Um, the trade court in New York came out and said that the tariffs are illegal and that they're putting a stop to those tariffs. And that just created a real explosion higher in the market. And then the futures continued after hours. And then when I woke up this morning, we were trading. I woke up. Oh man, I actually woke up at 1:30 Mountain Time. It was way too early, and I just kind of lied in bed to just after 2, which is 4 o'clock back east. And then I did the same thing I did on that CRWV day, which I shouldn't do. I really shouldn't do. It's not good for my health, but it made me a lot of money on that CRWV. The fact I did it, and it helped me again today. At like 5 after 4, I grabbed my phone and checked the futures. And I saw we were trading up. And I also took a quick quote on NVIDIA on my phone, which was trading above 142 at that point. And I was like, okay, I'm up. I'm up. And I got up, and I probably logged into the computer at like 4:10, 4:15 Eastern, and pretty much, that's the high of this move. I think that the futures market overnight might have been a little bit higher than this 4 a.m. high, but pretty much that's the high. And another thing that is a little bit interesting, which I just mentioned briefly, was the change in the IWM versus the QQQ relative strength. Initially, after hours yesterday, the IWM was leading up. When the 8 p.m. after hours close happened, I did break my rule again, and I checked the futures last night before I was going to bed. And the IWM, the Russell futures are up like 2.5% versus the Qs were up like fluctuating between up like 1.9 and 2. The IWM was the clear leader after hours. And then this morning, starting at 4, this downtrend in the IWM is crazy the way that they sold this thing down. And was relatively strong overnight, but this pre-market move starting at 4 really brought in the relative weakness to the IWM versus the Qs. So there was a switch. And you can see that very clearly if you compare a pre-market chart of the IWM versus a pre-market chart of the Qs. This pre-market chart of the IWM is disgusting. And it really lasts until like 10:20. Like just straight vertically down. Hardly even a little bounce, maybe a couple small ones over the course of a move in the IWM from 210.50 all the way down to under 205. Look at that. That's crazy move for the Russell. It's like $6 straight down for the Russell. The Qs, on the other hand, also traded lower. The SPYs also traded lower, but nothing compared to that slope that I just showed you on the IWM. Qs drifted down, but they were stronger holding points and bounces. It tried to hold yesterday after hours high as some support. Gave a little bit of a stronger, almost bullish pattern here into kind of the market open. And then when the market opened, they actually then continued the sell-off in it. And then the interesting part is by the close, what I just read out loud to you guys, the IWM actually closed up a little bit more than the Qs did, which is crazy. IWM went red first. At a certain point today, all 3 of the indexes touched negative territory, but none of them actually closed there. This was such a crazy, crazy move. And again, if you're a trader who only is looking at the market from 4 to 9:30, you missed all that. You missed. We broke out when the news hit at SPY 590. We ripped to at 4 a.m. above 598, over a $9 move. just for by the open to occur, we had pulled back to 592. So $8 plus to the upside, followed by $6 plus to the downside, all between after hours yesterday and pre-market this morning. When that news hit initially, and I'm no lawyer, I'm not a lawyer. I don't know a ton about the judicial system, how that all works. That is not my area of expertise. When that news hit last night, if you had short positions on, and I did, that was very, very scary. It created so much uncertainty. Remember what happened when Trump did the tariff pause? One of the biggest up days in market history. And now the court just comes out and says, you know what? Not only is there not going to be a pause, we're not doing tariffs at all. That stuff is illegal and we're done with it. It was very, very scary seeing that come out late last night and watching the market just completely rip higher on it. And I shorted some stuff, like 7:30 or so last night. Shorted some more stuff, got a little bit heavier again this morning. But at least this morning we had some more clarity. The best thing, and I'll see if I can scroll all the way back up to the first thing I posted in the VTF this morning at probably like 2:15 a.m. or so. It was a short note from Goldman Sachs that basically provided you all the information that you needed to know. It said that this court thing is a nothing burger. That is literally the term that it used. I posted it at 4:55 a.m. But basically, it said like, okay, the court might be striking down this IEEPA based tariffs. This is like an emergency act thing that Trump has been using. But the White House can just change to using Section 122 of the Trade Act of 1974 to impose up to 15% tariffs. Remember, we're at 10% currently. To impose up to 15% tariffs for 150 days without any formal investigation. And that short term move, it's 150 days, it's a lot of time, could serve as a bridge while launching Section 301 investigations, which take longer but allow for more durable targeted tariffs. In other words, Trump has other levers that he can pull to basically implement the exact same tariffs that are already on, just using different methods and different acts. And then, if anything, actually, even though at that point we're still trading at 597 in the SPYs, I actually started to think that this is bearish. And I'll kind of repeat a little bit of what I said in the morning meeting this morning. I think everyone knows that I'm pretty against tariffs. This just goes from, at this point, a lifetime of studying economics and markets. There's use case after use case after use case that show that tariffs hurt the country that imposes them. There are taxes that are paid. There are regressive taxes that are paid by the people who purchase the goods, in this case, U.S. citizens. So on the surface of things, we're getting this rip higher, and me being anti-tariffs, I should be like, yeah, this is awesome. And the market was like, yeah, this is awesome, because as everyone knows, every single time there are less tariffs, the market moves higher. Every single time there are more tariffs, the market moves down. If you don't want to believe my educated opinion on it, let the market be your guide, because that's what the market literally tells us every single time. And then I'm looking at this and I'm like, this is not good. Because one, the tariffs are going to be on the exact same way as they would otherwise. And two is there's a potential that this actually leads to a further unwinding of this big topic that's been spoken about for months, which is the topic of U.S. exceptionalism. Because all that this event is going to do is serve to further divide people, further divide Americans, and further, I think, turn away non-Americans from doing investments in the United States. And we just look like a mess. Like, we look like an absolute mess with what we're doing. Tariffs are on, tariffs are off, tariffs are paused, tariffs are back on, court's blocking tariffs. The other court is allowing the tariffs back, which eventually happened right during the day today through the Court of Appeals. Our tariffs are back. And I'm like, this is just crazy, and potentially is going to be really bad, and potentially just, unfortunately, divides the American people further. I will repeat the point that I made in the morning meeting today because I think it was a good point. I don't want to get into politics. I don't care, what your opinion is on Trump or the judicial system or whatever. Please keep it to yourself. What I can tell you in just an analysis of what can impact the market is, not my opinion on which side I think is right, but I have friends and I do enough research, or I know the thought processes and opinions of both people who are left leaning and both people that are right leaning. And basically, and we're kind of seeing this in a topic that's not really related to markets very much outside of the export of the cheap labor, is in the immigration policies, where you have folks who are on the right saying that people who are on the left are against democracy because why are they fighting to keep illegal immigrants in the United States? And you've got people on the left who are saying that people on the right are against democracy because how are they allowing to forgo habeas corpus? Are we even actually making sure that these people that we're kicking out are not U.S. citizens? Et cetera, et cetera. I'm not going to make the argument on which one is right, but I can tell you that unfortunately the United States is becoming more and more divided over time with its own citizens, and when that becomes the narrative or the thought process that gets pressed by either and both sides, you start to make them face off against each other, and that's bad. And then this situation just looks like an additional thing. And we saw it when the press secretary, whatever her name is, came out today and basically said exactly that. The press secretary came out today. I don't think we saw a statement directly from Donald Trump, but the press secretary came out today. I don't know if someone can, copy and paste the quotes that were in the virtual trading floor from earlier, but basically said this is a judicial overreach. Blah 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 blah. The court systems are, against Trump. That's not her exact words. I'm putting words in her mouth, but I just don't think that this serves any good doing this. When all that's going to happen is the tariffs are going to come on in a different way, but you just give people an extra issue to be mad about and to fight about, and you're wrong, and no, you're wrong, and people who are on the outside, we're already seeing a historic unwinding of investment from foreigners in U.S. equity markets, in U.S. bonds. You're just going to be looking at this mess and going, why do I want to invest in this country? I can invest in my own country. I can invest in China. I can invest in other places. And that was another thing that I noted, by the way, on we saw that headline like a day or two ago about SAP, which is a large European company, choosing to work on a new business basis with Alibaba in regards to cloud and AI services, when I think traditionally you probably would have seen that business go to U.S. companies. So to me, this is a problem, and it made me actually think at that time this morning at 5 a.m. when I'm reading that note from Goldman. Not only is this probably a sell the event type of situation, but this isn't. Not only is this not bullish, this is potentially bearish. So I was trying to press the short side as much as I possibly could today. It was tough because I'll be honest, I was a little bit too short to begin with. So I was down a lot of P&L by the time the after hours was closing. I woke up this morning and logged in to being down a lot of P&L. I made an incredible amount of money back today. Actually, it's probably one of the biggest, probably top 5 biggest negative P&L comeback days of my career today. Still finished down on the day, but honestly, pretty small, pretty small compared to where I was. But it made me really kind of have a bearish lean on this and gave me more confidence on sticking with those shorts, pressing those shorts, adding those shorts, and looking for the move. And honestly, I'm surprised we didn't go lower during the day today. It still seemed to me like on an intraday basis, this market held in very, very well. I know we were really weak off the open. I know NVIDIA, which held in pretty well for the most part today, helped the market, helped especially the Qs show some degree of strength. And, we sold off hard. It looked like we're going to be weak. We bounced back a little bit more than I wanted to here at 10:55 just to roll over again. Then we broke support heavily on volume here. And things were looking real good for the Bears at that point, and we were set up for what could have become a very, very nasty daily chart candle. But then we recovered, and it still seemed like there was a pretty strong underlying bid to this market. It really did seem like the market, and I know it's a Thursday, it's not like a monthly options expiration day or anything like that where they try to pin price a little bit more, but it really seemed like this market had a magnet to 590 today. Um, Below it, it just seemed like there was a strong underlying bid driving us up to 590. But every time we had a price get above, and there were a couple moments that were scary. This 1 p.m. was scary because now we had negated this breakdown candle from 11:55. We're getting above 590 in real time before this candle became a tail. I was watching it and I was like, oh man, are we really about to round up and break up? And then they jammed us back through 590, and then they jammed us back through 590 again into the close. So it really seemed like we were kind of pinned at 590. And we held in pretty well, I think, all things considered. I don't know if that's still coming from the corporate buybacks or what it is, because we know CTAs are buyers, but they're much less. We know vol control is a buyer, but much less. We know that corporate buybacks are a buyer, and they're still buying a lot. But we held in really, really well. And it made it so that this SPY candle on the daily chart is not a disaster. As a matter of fact, if you didn't know about all the pre-market and post-market and headlines and everything else that happened today, and you just, I'm never gonna really remember this candle. Like there are, I think, certain candles where if I look at a daily chart of the market, and I can go back 15 years, my entire career, there are certain daily candles that I will remember for the rest of my life when I see that candle. Today's is not going to be one of them. Yet it was one of the most crazy days I've ever had. I just mentioned it was one of the biggest P&L comebacks I've ever had in my career. But when you look at this daily candle on the SPYs, it doesn't really look like anything. The volume, normal. The range on the day, normal. If you add on, if you're looking at this daily candle as a futures daily candle, so you get the full overnight action, then it probably looks significantly more crazy. We could take a look at that when Pat publishes his note tomorrow morning because he uses the futures S&P chart for his technical analysis portion of his note, so we can see that there a little bit. But this candle is very nonchalant, and we didn't close at lows either, which I wanted to see us close on lows today to be able to set up for a break of this ADMA and be able to set up for downside break continuation. Or the Qs, a little bit more of a damning candle because it is a failed breakout on the Qs. We were talking about in the morning meeting today, where I think we were still trading above 523 when I was doing the morning meeting. I said 523, that's the really big level. If we close below 523 today, it looks like a failed breakout. So the QQQ daily candle definitely looks a little bit worse than the SPY daily candle. And the IWM daily candle almost looks like it's bullish almost. A little bit of a downside tail. There was some relative strength there, maybe setting up for the breakout. So I don't know. Bottom line, I guess, is it's a really insane trading session. I'm exhausted from it. However, there's not much of a change at all on these technicals. Maybe with the Qs, but the SPY daily chart technicals overall still look pretty darn bullish. The IWM daily chart technicals look pretty darn bullish, and the Qs maybe a little bit of a breakout failure, but it's not. You can't characterize it as an engulfing candle. If we had closed at, I don't know, 513 today, which I don't think would have been impossible, you'd be looking at a disgusting negative Maribozu engulfing candle, a warning candle, day to take notice of. Remember, we used to have those days to take notice of. Um, but for the most part, there's not really too much to talk about here, to be honest, at the end of the day. And I guess it makes sense when you think about the narrative. Because at the end of the day here, our narrative is exactly where it was yesterday at the close when it comes to this entire tariff situation. They got deemed illegal by the court, and then the Court of Appeals said, nah, we're good with them, they're back on. And not too much of a change, really, with anything. And we kind of go back to where we had been, which is we're approaching the end of the month of May. There's a $19 billion sell rebalance in the S&P coming from the pension funds. And then we begin to start to get into June and July, which will be interesting. June is seasonally a weak month. July is seasonally a strong month. August and September are seasonally a little bit weaker. Um, but we're starting to get into June and July, which becomes interesting because that is where we will begin to see the impact of all of this tariff stuff onto the economic numbers. I think we'll get a taste of that with our May numbers, which will come out in the beginning of June. But again, I harken back to that Walmart earnings report where they said, we're not even really going to be increasing our prices until the end of May. So you're not really going to see it, I don't think, too much on the May numbers in June. It's going to be more like um, the June numbers in July. But now we're talking about a while out here, and I don't want to go out too far. But when we see the June numbers hit in July, that's going to be happening at about the same time as the 90-day tariff pause ends. But that also happens in what is seasonally one of the strongest months of the year. July tends to be a real barn burster to the upside. A lot of new mid-year flows come in July in the same way that a lot of start of the year flows come in January. So it's going to be an interesting next couple of months. These last 2 months of April and May, I know we still have one more day left in May, but these last 2 months have been some of the craziest that I've ever traded, to be honest. And I probably said this before. I want to work on sizing down right now. These last 2 months, it's almost been too much. The P&L swings have been so much bigger than I've ever really had over the course of my career. They've been too big, and it's been too stressful. And I lost sleep in April. I lost sleep in May. As I get into the summer months, especially I'm going to be traveling a lot in June, I want to be able to try to enjoy myself a little bit, which isn't to say I'm not going to be trading. I'm certainly going to be trading. I will be trading, but I want to work on sizing down on these six-figure P&L swings that seem like they're happening daily. It's just too much for me. So I think that's pretty much all that I've got. From a day trading perspective, I didn't really do too much new. I got out of my SMR trade today. Out of that short, that was like a couple day trade. The NVIDIA options I had on to hedge myself for the earnings report, I actually made money on, which I'm pleased about. And I exited most of those. I day traded SPYs and Qs, short a little bit today, made some money on them. And, got out of path after hours on that earnings report uptick. Where's that thing trading now? 14.50. Went up to 15. I knew I could have been a little bit greedier on that offer. I was originally going to offer like 14.50. I was a little bit below it. All right. That is all that I've got. I'm happy to take a look at whatever you guys have to say. Judy, I did not manage my trades well today. It was the worst day of the month for me. I'm sorry to hear that, Judy. Definitely tough if you're trying to chase momentum upside at any point today, which I think some people were doing. And I would just say that is why the big picture, I think, is so important. I get it for people that are momentum scalpers, momentum day traders, don't really take any swing positions, which I think, decently describes you, Judy, a little bit, even though I know you do take some stuff overnight. You're probably primarily more of a momentum day trader. But even when you are, momentum day trading, you also just, I think, want to keep an eye on the big picture and the data and the information, because, I don't know, it sounded like there were a couple people that were trying to buy upside breaks today. And I was like, I just don't think that that's the right move after everything we discussed in the morning meeting and all the news and everything. So glad you're having a great month, though. Good stuff. From Eli, at this point, do you think time is still on the bull side? Technically, yes. So this has been one of those things that we've been talking about, because I don't think technical analysis is everything. I think technical analysis is extremely important, but it's one of the few things that you want to pay attention to. The technicals look super bullish still. And the more we spend time going sideways up here, the more that 21 EMA catches up on the daily chart, You could even make an argument looking at this chart. And this is kind of what I had said with Sammy and JR yesterday, that we're making a bullish consolidation within a bullish consolidation, basically consolidating in front of resistance. That's one of my favorite bull patterns, honestly, for continuation, because you have overhead supply from the selling that's there, you have underlying demand, but that underlying demand is really pressing up into those sellers. It wears away those sellers over time, and then technically that sets you up for a breakout for the next leg. So the technicals overall here continue to look really bullish. Time is a bull's friend. It's enabling the 21 EMA to catch up. We know that the market dynamics are turning less bullish. They're not bearish. I want to make that clear. We've discussed CTAs are set to buy less. Vol control is set to buy less. They're not the dynamics are not bearish. They're just less bullish. So what that it enables a catalyst to overwhelm the smaller amount of buying that comes from systematics that can bring us down. That can happen more easily now than it could have happened a few weeks ago. So I would say that the probability of a failed bullish pattern right now in the technicals is higher than it had been in late April or early May. But while that is higher, it's still a lower probability situation, because while they're less supportive, they are supportive. While and at the same time, you combine that with bullish technicals. So I think that the only thing that can really bring us lower right now is a negative catalyst, and the only place that I can see that negative catalyst coming from would be bad economic data, which I don't know how much that we're going to see in June off the main numbers, like I was saying earlier. It may be more of a July situation, and July is a long way away. So, kind of in wait and see. With that said, we're having catalysts seemingly every 10 minutes. There's new news coming out that's whipping this market around. It never ends. I've never seen anything like it. It's really, we saw a little bit of this in the Trump 1.0 presidency, where he would just tweet something or say something and the market would move in one direction or the other. But that was tame compared to this. I mean, this has just been insane. So I think that in order to really go down, when we still have some degree of supportive market dynamics, we certainly have supportive technicals that are getting better and better over time, you need a catalyst. With that said, the lesser CTA buying, lesser vol control buying, is it enough to give us another leg higher? I'm not sure. I almost feel like we're at a spot here where highest probability is that we continue higher, but only by a little bit compared to moving sideways. Like I feel like the probability of moving sideways is almost as high as the probability of continuing up. And the probability of continuing down right now is the lowest, but that's not to say it's impossible. And I would say also that you need to know the key downside points that if we get below could break the market. And really that key downside point is Friday of last week. Friday of last week, SPY 575 spot 60. If you break that, you're breaking the uptrend. If you're like to drawing, trend lines, you're breaking the trend line. You're breaking the 21 EMA. And we know from the Goldman Sachs data that the medium, I think it's the medium term CTA sell trigger, is actually sitting just below Friday's low. So if you can get below that low, you will get technical selling in the market because the trend is breaking, technical selling in the market because you're losing the 21 EMA, and systematic selling that'll come into the market because you're losing the CTA trigger. But you have to be able to break that point, and you're not going to break that point most likely without some sort of catalyst. So be prepared for all situations. Know your key levels. That's always the bottom line. Know where the breakout levels are for the market. Know where the breakdown level is for the market. And recognize actually that there is a decent probability of just continued sideways price action as we get into June, which June is not historically a bullish month. I was just asking AI a couple mornings ago, about some seasonality information on the month of June. I don't remember exactly what it said, but I think over the course of the last like either 20 or 50 years, June averages 0.47% green. Basically, June averages being flat. So it's actually one of the weaker historical months of the year. So June average is flat. At the same time that I think there's a higher probability based on everything I just talked about of a sideways market. I wouldn't be surprised to see if June is primarily sideways. But to be determined. We'll see what happens with these daily news fluctuations, and we'll see how the technicals adjust over time, and we will continue to take in and digest the market dynamic information that we get as well. So thanks for the question, Eli. From Dave S. Today I felt that, at least from the short side, price action gave us what we wanted for intraday trades much more quickly, even though we closed flat. Right now, I am tentatively assuming that this is because some pension rebalance is counteracting the infinite bid somewhat. Yes, applause right there. Yes, it is, but also the infinite bid is less. It's both happening at once. You still have very strong corporate buybacks ongoing though. Also, I've had some better luck this week, which been the best for me personally over the past month, which has got me thinking, is there a way to quantify how much overall unemotional buying versus unemotional selling there will be via an indicator of some sort to try and only push risk when we think when things are more in balance and price action can play out more naturally? So you're looking for an indicator that is market-wide unemotional buying versus unemotional selling. I've never heard of such a thing. I don't know how you would even build that out. At first, I thought you were asking about measuring yourself, like for your own journaling. Was I trading emotionally or not trading emotionally? That might be a little bit easier because you just have to keep track of it kind of in real time as it's ongoing. But I've never heard of something that's able to measure that in the market. I don't know if you can measure that in the market. The only way that you'd be able to measure that is if you try to classify something like retail buying and selling as emotional versus unemotional, or fund buying and selling as emotional versus unemotional. But I think that's a waste of an exercise. I don't think it's that way. Um, but also, don't say you had better luck. Say you did a good job following your game plan. It's not luck. It's not luck. Just keep up the good work. All right, what else? From Kit Kat, where can we view the CTA data? Is it available on Bloomberg? I don't know if it's available on Bloomberg. I don't use a Bloomberg terminal, but we typically get updates on it in the virtual trading floor. I highly, highly, highly recommend. You might be new to the team here. I'm not sure, though I do feel like I recognize your Kit Kat symbol. I highly, highly recommend that you are reading Pat's morning note that he publishes every morning. He usually publishes it 8:30, 8:45, something like that. You can see it in the alert section here of the VTF. It's a Google Doc. You can see for today as an example, he posted at 8:42 a.m. If you parse through that note every day, as I highly recommend, you will usually find updates on systematic buying and selling from CTAs and vol control and stuff in there. On top of that, there are a few awesome members of our team here in the virtual trading floor who oftentimes get additional information for us that they will post in the virtual trading floor. So it's all here. It's all here. Well, everything you need is here. From Dennis, for me, the sell setup was the cleanest and strongest in many weeks. That's not saying a lot. That's not saying a lot. This has been the strongest market. All the statistics are starting to come out about how this May is one of the strongest months and blah, 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 blah. One of the strongest Mays in a million years. All those stats are starting to come out. So yeah, this was the easiest sell setup in the entire month of May for sure, because the entire month of May we have only gone higher. Almost impossible is money shorting today, but my daughter's school event this morning was great timing. I initially didn't even want to trade. Yeah, you kind of had to trade today. Tell them they got to walk to school. I initially didn't want to trade and be in the moment for my kids, but the market had other plans. Yeah, I wanted to get a good night's sleep last night, but the market had other plans. That being said, my mindset wasn't in full go mode, and even pulling out 3 times my risk today, I think that's how you interpret what you're saying there, while being gone for 90 minutes feels like I kind of failed and didn't make close to what I should make on days like today. Opening some thoughts on need to trade conviction with more aggression within my risk parameters, and I've been struggling to do so. I was a bit afraid to go in this go time mode, even when my gut is saying it's time, feeling like I missed out on a lot of potential. I guess not really a question, just some personal thoughts on today. Yeah, for sure. So, look, one thing I would say is that our personal lives are very important. Your family life is very important. Your ability to participate in your children's event is very important. The market is a opportunity creating mechanism. You do not have to be involved in every trade and every opportunity that happens every day. There are more important things in life than money. So that would be the first thing that I would say to you. And I don't think it's wrong. It's unfortunate that you had to do something today, but I don't think it's wrong when you know that you had to do something or had a late night or whatever the situation is. Um, I don't think that it is wrong to say to myself, my game plan for today is to take a step back because I've got a more important thing to do and be there for my children. And therefore, I would argue that you should not have made more than you did today. And you might pull your hair out thinking you should have made more, and that's not going to be fruitful. Um, know what your life priorities are, and if you had an important life priority today that meant that you couldn't fully focus on the market and it happened to be a really good day, it just is what it is. There's going to be other good days. Um, Now, beyond that, if you feel that you struggle a little bit to step up the risk on those it's go time type of trading sessions when there's nothing else going on, then yeah, that's something to work on. That's something to work on. I think that like recognizing A plus days, recognizing A plus setups ahead of time, and then being able to really lean in and put the risk on those trades. I think that is a big part of being really successful in trading. And as a matter of fact, I think that it's one of the things that separates a good trader who makes money from a great trader who is like a seven-figure trader who makes a lot of money. It's that difference. It's the ability to recognize that today is not a typical day, this trade is not a typical trade, and I can make significantly more. So how do we go from being the good trader that makes money to being the great trader who is a $1 million trader or whatever? The way that we do that is by exercising our mind to be prepared for those moments. And that comes in the form of journaling and visualization exercises and meditation exercises. I don't do as much of it as I used to. I feel like I'm pretty good at capitalizing on the important days. If anything, sometimes my bigger issue is I'm like getting too big and I need to take a step back. That's for me personally. But when I was a newer trader, so here's a true story I haven't told in a while. Maybe it's in one of my training program classes. I tell this story. I'm not 100% sure. Um, when I was a brand new trader on the desk at T3, my first 6 months or so, whatever it was, a big thing back then was to have your first $1,000 day, have your first comma day. It was a big thing. And interestingly enough, I was like amongst my peer group, even though amongst my peer group I was actually one of the most consistently profitable. I was one of the last actually to be able to have that four-figure day, have that comma day. I remember having a day, maybe even two. I definitely remember one of them where I got to above $1,000. And what a lot of traders did when they were new and they were above $1,000 for the first time, they wanted that comma day. They would just close out all their positions and say, "I got it." And for me, I said the same thing to myself then that I would say to you or me right now, which is I don't stop on the upside. I stop on the downside. I don't stop on the upside. Um, who's to say that first time I wasn't over that I was over $1,000, that it shouldn't, that I couldn't have turned that 1,000 into 2,000 or into 5,000 if the day was really going my way. But if I just shut down the second I was over 1,000, I would never be able to find out. So I wanted to have like a limit up down, which is something we've talked about in the past, where if you're up a certain amount of money, you're making sure that you're going home with some money. I wanted to have that limit up down, so I gave myself some room. And I think I closed up $700 or something like that on the day. I didn't get my comma day, and it sucked. It took me like 6 months to get that first $1,000 day, and everybody else had it already by that point. But I remember, and this is the point of the story, um, doing a few things to try to prepare myself mentally to get bigger on that right trade. And uh, visualizing it was a big thing. I had seen up until that point, even though I hadn't taken them, trades where I easily could have made $1,000. Trades where everything really lined up properly and I couldn't really see it in the moment and I didn't take enough risk, but by doing good journals, I could see it after the fact. And people say hindsight is 2020, like that's a bad thing. I think hindsight is 2020 and that's a great thing because we can use our past experiences to improve for the future. So you recognize, okay, during the day to day, that was that trade I could have made $1,000 in. It was all lined up, but I didn't see it in the moment. I didn't take enough risk. So you relive that trade in your mind's eye and you say to yourself, this is what I need to do in a similar situation. I need to size up. Everything is there. When I see everything line up, all the layers of probability line up, I am going to size up on the risk and I'm going to make even more money or lose more money if that trade works or doesn't work. But this is the opportunity where I need to do it. So you visualize doing it right. A long time ago, I listened to I think it was a podcast by a sports neurologist who said that in sports, you can build like 70% of the neural pathways that will improve your sports just by visualizing you playing that sport well as if you were playing it. So if you're playing it, you're getting 100%, right? You're actually doing the act, but just by visualizing it, you can develop like 70% of those same neural pathways that are going to help you develop success. I mean, that's huge, right? That's huge. And I incorporated that a lot back in my professional fighting career. And you can incorporate that as well into your trading career, as I've done, because I already knew that. On top of that, I remember, I don't know if this is just motivation or if it actually has a positive impact, but I remember hitting a point where, I'd been a trader for 4 months or whatever, 5 months, and everybody had that $1,000 day already, and I hadn't had it, where every morning I was looking at myself in the mirror before leaving to go to the office, and I would look at myself in the mirror and I would say, you're going to make $1,000 today. You're going to make $1,000 today. You're going to make $1,000 today. And then I did it. And once I did it once, I remember this also. Once I did it once, I did it again and again and again. It really like opened me up to being able to break that barrier and make that $1,000, have that $1,000 day happen significantly more regularly, to the point where then it just became, part of business. So I think that a lot of what I just described there could help you, and a lot of what I just described there is how all of us traders can work on taking things to the next level. From Luke, I think the tariff bark is far worse than its bite. It's a good time to buy any dips we see, sort of a V-shaped market. Plus, the Fed is predicted to likely print money next month, which will flood the market. Okay. Yeah, I'm unsure, honestly. I mean, the V-shaped recovery has certainly already happened. That's been what retail has been pushing for, and they've done a good job with it. Honestly, I don't know. I mean, if you read like Charlie McElligot's notes, and that's one of my favorite, if not my favorite, analyst out there. He is likening the 10% tariff, and you can see the charts on where that puts us historically in terms of tariffs previously. But it's the biggest increase since that Smoot Hawley or whatever it's called in the 1930s, and it should have an impact. And even if that doesn't impact itself directly, the mess of supply chain management from this should have some degree of an impact. So we'll see. Time will tell with the economic numbers this this summer. From Dennis, yes, I'm most certainly have my priorities. I would never miss something like that for money. The market always comes second to me. I definitely followed my life game plan. Thanks for the affirmation and great analogy. I consider myself a good trader, but not a great trader. Thanks for the reminder. I have work to do. Might be worth hiring a coach. My risk is in a realm these days where I can afford it. Awesome. What is Vernon posting here? First Comade shot of Baijo? Yeah, it was. Comade consistently SLV. Are you commenting? Are you copying and pasting from the YouTube? I'm gonna get to the YouTube. I always get to the YouTube. I just always I take care of the VTF first. And I appreciate the commentary coming into the YouTube also. The YouTube engagement on there I think is helpful. But I'll what do you mirror mirror on the wall, who is the Comade daily? Visualization and work ethic, yep, for sure. That used to be a thing in the office back in the day. Trader their first Comade, I'd make them drink a shot of Baijo. Right. How do you meditate? I would turn you over to my class that I have on that in my training program. I have like an hour-long class on I think meditation and visualization and some of this more esoteric stuff that's necessary for success in trading in the training program that you should definitely go through. Definitely worth checking out. What do you do for a 2 comma day? So that's $1 million day. I have not had $1 million day. Up until relatively recently, I hadn't had a 6-figure day either. Now I feel like 6 figures up or down like every friggin' day. It's too much. It's too much. You gotta size down. 2 shots of Baijo for sure. You have to drink a bowl full of Baijo. Like when I was in Inner Mongolia, I had to drink that stuff by the bowl full. It was great. I almost died. I almost died of alcohol poisoning in Inner Mongolia in like 2019. That's a story for a different day. That's a story for a happy hour with some drinks. Over to the YouTube from Robert, from our friend Robert. Yesterday I watched a videotape with you. First real size, which I remember happened at the 138 level break to the upside. The second one was at the 140. Do you like to link these after market levels where some tape action trades? I do. So I make note of those really important levels. So for me, the 139.80 to 140 was really important after hours. There's a buyer there on the way up, and they held it as support after the upside capitulation to 143, which was also an important level on the way down. So I wrote for the VTF this morning the most major levels I was paying attention to in NVIDIA was basically the range between 139.80 and 140.20 on the downside, and 143 to 144 on the upside. Those are the really important spots to pay attention to. I think if the market would not be heavy today, NVIDIA would hold and bounce from the 140 level. It's interesting that you would say that because my thought process was almost the opposite. I thought that if NVIDIA lost 140, it would pull the entire market down. And I actually think that the market held in really well. And when NVIDIA was then losing 140 and the market wouldn't break, it almost seemed like NVIDIA wanted lower and the market was holding it up. So that's interesting. Tomato, tomato. I almost interpreted that literally the opposite. This market is super rough, Cyril. I agree. It's almost like too much. Like, volatility breeds opportunity for sure. But I like a medium level of volatility. I like it when there's opportunity to make money. I don't like flatline markets where there's no opportunity to make money. But I'll be honest, I don't like it when there's so much volatility, so much movement, and so much opportunity that I can't step away for 10 minutes to eat lunch away from the computer, that I can't sleep in if I want to 6:30, 7 even to catch up on a little bit of sleep. This is almost too much. I still have my plate for lunch right next to me actually on my computer desk. It's disgusting. Get this away from me. I don't like it. Um, anyway, uh, Joel wants in on the VTF. Well, we want you too, sir. From Kevin, what's the word? Been fine tuning my playbooks, and some of these opportunities give me the opportunity to go big. I've been advised for A plus setups to go 50% of my daily stop. Others say to go full buying power. Do you have any thoughts on this? Yeah, I don't like that term full buying power. I don't think that full buying power is the right way to say it. The first way you said it of what percentage of your daily maximum loss, I think is the right way to think about it. So I have been an advocate of on like a true A plus trade, being willing to put your entire day on that trade and going 100% of your daily max loss on that one trade when it's really there. I like that, and then otherwise for like B level setups, you'd want to be able to give yourself, I think, like 3 to 5 in a day, depending a little bit on a couple factors. Or if they all fail, you're done, and then you can kind of break it down from there, if that makes sense. From Gabriel, SLV might be setting up. Do you think it's worth trying it through 30-50? Is a solid setup. Catch up to gold. SLV looks really good. GLD looks similar. Actually, I do think that the SLV looks better, but I don't like buying the weaker one. I don't really trade the commodities too much. I could say it more with stocks. It's a lesson that I've learned over the years. There's definitely been times in the past, not anytime recently, where like Lyft is where the trade is. It's super strong. Lyft went, so I ended up buying. Sorry, Uber. Uber's the trade. It's super strong. It's going. So I ended up buying Lyft as the catch-up trade, and I'm thinking that Uber's too extended or already went or whatever. And then Uber continues to be the outperformer. I don't like buying the laggard. I learned that a long time ago. I like to buy the leader, even if it feels like it already went. I'd rather look for a setup in the leader, which is probably gold over silver in this case. But I don't have as much commodity trading experience. Have I had a 7-digit day? No. No, I have not. So same before. No 7 digits. God, I don't want one either. Even on my side, I don't want it. Because if you make that in a day, it means that you're risking a lot. Also, almost I've been about halfway there though on one day in April. Actually, got about halfway there. Too much, too big. Size down. I'm going to be in Paris for a week in June. I'm going to be in Los Angeles for a week in June. I'm going to be traveling around. Probably going to be a lot going on this summer. I'm going to be back in New York. I need to actively work on sizing down and reducing my buying power. From Jackie, not really a trading question, but I was curious about your time in China. Can you speak a little bit about this? And did you work there early in your career? Also, were you trading U.S. or Asian markets during your time there? Sure. I've been to China 4 or 5 times because I've mentioned in the past that I have had a lot of foreign people on my physical trading floor back in the day, particularly from China. One of them had, after we unfortunately could not sponsor his visa to stay in the United States, they do what all the very educated foreign people do who come to the United States, and then we don't allow them to stay. He went back to his own country to start his own business and innovate. And he basically started a trading company out there. and he brought me out just to kind of, one, because we were friends, but two, just to kind of give him some advice and help him kind of get the business started. And I also spoke at a couple very big conferences there. Um, I spoke at two big trading conferences in Shanghai, and I spoke at one really big conference in Guangzhou. The Guangzhou one in particular was very, very big. Um, so talking about my experience there, I have only ever had the most incredible experiences in China. The people just extremely, extremely welcoming and open and kind. I think everyone should go. It's a place that everybody should go to. We turn it into a boogeyman, both the left and the right, when it comes to the media. Love to turn China into a boogeyman that it is not. I don't necessarily agree with everything that they do or practice, or that the government does or practices, but overall, I think it's a great experience just for people to travel generally. Honestly, um, just to travel generally, to experience different places. I think that there's places that can only be experienced by going there, and you have a better understanding of those people and what their lives are like and what the environment is like. And China, just especially because it's the second largest economy in the world, eventually probably will be the largest economy in the world, has a massive population, and is so intertwined with the United States. It's a place that I think everybody should visit. And I've always had, like I said, just incredible experiences there. I never worked there full time. Was just there, and traveling around. And another really cool thing, that my guests who brought me out there, every time they brought me out there, they'd give me like a different little mini vacation almost that we would go on. So the first time I was over there, there's another story for a happy hour. I got brought to the Shaolin Temple. Really cool for me as a martial artist. I ended up fighting a bunch of people there, which I was not expecting to do. Kind of got lost in translation. Basically, ended up fighting the monks at the Shaolin Temple. No joke, no exaggeration. Uh, I got to go to Inner Mongolia, which was an incredible experience. Got to travel around through a lot of the major cities: Beijing, Shanghai, Guangzhou. Shanghai is one of my favorite cities in the world. And I'm decently well traveled. I like to think, at least. I'm decently well traveled, and Shanghai is one of my absolute favorite cities in the world. Shanghai is incredible. Between you and me, I don't want to offend anybody. I don't like Beijing very much. It's worth going to just to see some of the sights, but it's definitely not my favorite. Shanghai is incredible. So yeah, just an incredible experience. The market hours are crazy, and I have traded from there. Um, I was trading from there, but it was kind of one of those things where it was like I was trading the open, and then we would go party all night, and then I would come back and I would trade the close, and then I would sleep, and then sometimes like sleep in the office, and then like wake up and work. They have an incredible work ethic. The people that I worked with over there, like literally, you would have like a couple beds in their office for if you needed to take a nap or you were just not going home that night. I was always very impressed by the work ethic. I actually really liked the work culture there, because on the one hand it seemed like they worked 24/7, but they also kind of made like their employees like their family, and everybody did everything together, and it was cool. So yeah, I guess that's a brief overview of my experience to answer your question. Trading the overnight hours is tough. I was in Japan last year, and that was really just for a pure vacation. But I left a few swing trades on, and it was very hard to manage, especially because I was trying to do tourist stuff during the day. Um, I like my favorite hours to trade, honestly, are mountain hours, which is where I am now, and or like kind of European hours. Uh, what's that, like plus 6 hour difference? Um, I particularly enjoy. I've had great experience working and trading in Barcelona. Barcelona is just a perfect culture of the time difference where you're done working late. like the afternoon meeting. I'm done with the afternoon meeting at like 11 p.m. But it's such a late city that you have no problem getting like a midnight reservation at like a top restaurant, and that I really liked. Paris is pretty good too. Also a little bit of a late culture, but not quite as perfect as Barcelona in that regard. So I like Paris a lot. And then Robert knows I'm gonna trash on London. The problem with London is that the city just closes too damn early. Where they're 1 hour less than Paris or Barcelona, but the city closes so early. It's like trying to get a good meal after I finish the afternoon meeting at a restaurant is like very hard. Maybe I just need more experience and need to know the better places, but that's tough. Anyway, I digress. I'm gonna be in Los Angeles. I am going to be in Los Angeles the week of. I'm actually flying from Paris to LA, which I'm not looking forward to. It's like a 15-hour flight. I'm going to be there the week of June 23rd. I'm actually. I gotta let Pat know and everybody else know. I'm probably not. I'm probably taking the 23rd off for that flight. Unfortunately, I think I'm just going to be literally on a flight the entire training session. The last time I was on a flight, when I flew from New York to Jackson Hole last, which was in December, I was able to trade on that flight. I've never been able to trade on a flight before. The Wi-Fi has never been good enough. I've never been able to really connect, and I traded on that flight, which was awesome. I hope I'd be able to trade on that flight too, but I feel like I'm not going to. I'm kind of flying a trash airline on the way back, but I booked my flights too late and there wasn't much left. I'm flying. I've never flown them before, like Norse Airways. I think they're like a budget airline. Paid up for the bigger seat. They don't have like a first class, but they have like a bigger seat option. So hopefully the Wi-Fi works. But yeah, that week. You're gonna miss me. I was actually, for people who are in LA, I might try on the Wednesday to put like a little bit of a happy hour together on the 25th. Do like a little bit of a happy hour for the LA traders at T3. I haven't done any research on that yet or whatever, but I'm gonna try to do that. Okay, did I get everything? Let me go back over to the YouTube. God's Child on the YouTube says that we're trading the London hours suck. I'm from there, but Barcelona is one of my favorite places. Yeah, awesome city. Liam wants to know if anybody's in the North Carolina area. All right, I am hopping off. Great afternoon meeting. I'm tired. I'm gonna actually try to get a little bit of a hike in this afternoon if I can. Have a great night. See you all tomorrow. And if you're in the YouTube, you know what to do. Thumbs up. Tell your friends. Get involved.